Hello and welcome. In this video, we will learn about the piercing line candlestick pattern. Okay. Now this piercing line candlestick pattern is a two candlestick pattern, meaning we will have to look at two candles and decide if it is a piercing line or not based on these characteristics. Okay, so let us see what the characteristics of this pattern are. First is that it must occur at the bottom of a downtrend, meaning the price should have been coming down from past few candles. The downtrend must be there, and at the end of the downtrend this pattern must appear, okay, or this pattern must form. In this pattern, the first candle is a long red candle. The first candle is a long red candle. Long because we want it to be a bearish candle. If it is a small candle, it means that there is an indecision, meaning there is the buyers and sellers both are equally active and equally strong. Whereas if we have a long candle, red candle, it means the sellers are stronger than the buyers here. Okay, and we want a red candle at the beginning, meaning the first candle must be a long red candle. The second candle must open below the low of the red candle. This is the low of the red candle, and the second candle must open below the low of the red candle, okay, and close above the midpoint of the body of the red candle, and it must close above the midpoint of the body of the red candle. You see, it is the midpoint of the body of the red candle and not the midpoint of the candle itself. If you consider the candle itself, then it is from here till here, and it is not the midpoint of the candle that we want. It is the midpoint of the body. Okay, this is the body from here till here. Okay, midpoint of the body is somewhere here, and we want this candle to close above the midpoint of the body of the red candle, okay, and if that happens, we will call this as piercing line pattern. All right, now see, if it closes above somewhere here, then it would be a bullish engulfing pattern, correct? But here it is not closing above, it is closing below the open of the red candle but above the midpoint of the body of the red candle, and if that happens, we call it as piercing line pattern. Okay, now many a times we will not be able to find this pattern as it is. This is a perfect piercing line pattern, okay, and in the real market we may not be able to find a perfect piercing line pattern, and that is when we settle with the variations of piercing line pattern. All right, so this is a variation, this is a variation. So here we have a red candle, okay, we have a red candle, we have a green candle, but this green candle is not opening below the low of the red candle. In reality, we would have wanted the green candle to open here, but that did not happen. But the closing of this green candle happened above the midpoint of the body of the red candle. So midpoint of the body of the red candle is here, and it closed above that, and this is a valid piercing line variation. Okay. Next, here we have a red candle and we have a green candle. Here the green candle did not open below the low of the red candle, but it closed above the midpoint of the body of the red candle. So this is considered to be a valid piercing line pattern. Okay. So we can accept these two as piercing line patterns. Whereas these patterns are not considered as piercing line patterns. Here, if you see, the candle, green candle has opened here and it has closed above the midpoint of the body of the red candle. Correct? So here is the midpoint of the body of the red candle and this candle has closed above it. But then this candle has also closed above the opening of the red candle. Correct? So this becomes a bullish engulfing pattern. This becomes a bullish engulfing pattern and not a piercing line pattern. Here we want the first candle to be a red candle and then we want a green candle. This green candle is satisfying all the conditions. It has opened below the low of this candle and it has closed above the midpoint of this candle. So everything is fine, but we do not have a red candle here and so this is not considered as a piercing line pattern. Here we have a red candle, we have a green candle. Green candle has opened below the low of the red candle, but it has not closed above the midpoint of the body of the red candle, and so this is not considered as a piercing line pattern. Alright, now it doesn't matter whether the price has gone up after forming this pattern. According to the rules, we do not consider this as piercing line pattern. Alright, now let us take two charts and see how we can take trades in them. Okay, first we have HDFC Bank day chart. We have a nice downtrend, price is coming down, and we have a piercing line pattern. We have a red candle and we have a green candle. Green candle has opened here way below low of the red candle and it has closed above the midpoint of the body of the red candle, but below the below the opening of the red candle. So it has closed here. Now you may think both are at same level, but it is not so. The green close is slightly below the red opening. Okay, so this is a perfect piercing line pattern. Alright, and we can take trade here. For taking trade, we need to place our stop loss, and the stop loss would be below the green candle. But if you go little behind, you can see the price had come till here. So we need to consider this green candle to place our stop loss. But if you still go further, you can see that the red candle had went till here, and so out of these three, this is the least point, and so this will be considered for placing the stop loss. So we place the stop loss here, and we have our first target here, and we enter the trade at the closing of this candle. Okay, and the price has gone in our favor. Okay, remember that I have taken a chart wherein the trade is successful. There are charts where the trades are not successful, and that is why we need stop loss. Alright, now you can take trades in three ways. You know that. First is a risky trade, that is when you enter the trade that is when you enter the trade as soon as you see a piercing line pattern happening. Okay, first one, risky trade. Second is a little bit safer, that is when you look for a support before the pattern. So the pattern has happened here, go before, look before and see if there is any support at this place. So if there is a support at this place and if the pattern has appeared here, then it is a safe trade. If you want to be still more safer, then you will have to wait for price confirmation, meaning you will have to wait for a candle to close above this, which has happened here. But if you take trade here, the risk will be this much and the reward will be only this much. Okay, so generally it is not required to wait for the price confirmation here, and you can wait for price confirmation if the reward is more. Okay, and once again it is a personal preference. Now if we try to understand the psychology of this, price was coming down, bears were in control, sellers were in control till here. Okay, till here. Now the next day price opened here and all the bears were happy because the price gapped down. But then the buyers came into the market and they pushed the price up. Sellers tried to bring the price down the entire day. Even after trying, the sellers were not successful, and at the end of the day, buyers were able to move the price way beyond the midpoint of the red candle and close above it, meaning the prior trend has ended here and now a new trend will happen or new trend will come. Okay, it can be either sideways or reversal. Alright, so this is about the piercing line pattern. Let us take one more example. This is a 1 hour chart of Bata India. We have a nice downtrend. Bears were in control till here. Then we have a green candle, and this is a variation of piercing line pattern because the opening of the green candle is not below the low of the red candle. Okay, but this is okay because it has closed above the midpoint of the body of the red candle. Okay, midpoint of the body of the red candle. So this is fine. Now if we enter the trade, then we'll have to place our stop loss first, which is below this candle, and then this would be our first target, and we can enter the trade here at the closing of the piercing line pattern. Okay, we can go back and see if we have a support level here. Alright, so the trade has gone in our favor and it was successful. Alright, so this is how we trade piercing line pattern.